Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, March 13, 2025. We're looking at a daily chart of the SPY or SPDR, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had what's called a down day in the trading parlance. They came back to retest the trend line. They made a new low and officially closed the day at a new low. This is all interesting information. Let's go back to the tinfoil hat event culminating tomorrow on the 14th and have that discussion real quick. A lot of times markets will trade up or down into these events. It's pretty apparent she's trading down into the event. That's item number one. So that's a positive for the whole concept of where are we and what are we looking for? We're looking for a low. But here's the thing. We're not necessarily, can happen, but not necessarily looking for a low tomorrow. Could come on Monday, could come on Tuesday. What's actually happening is the market is shifting. It's actually transiting from one, let's just call it one energy field to another. That's one simple way to look at it. Here's a visual of what we're talking about. Let's say we're here in energy field A and we're transiting across this line into energy field B. Just because you get just over the line by a foot, 2 feet, half a mile, whatever it is, doesn't mean you get that immediate shift. However, the longer you're in energy field B, the more you're in energy field B, the deeper you go into energy field B, the more you're looking for the turn. You're looking for energy field B to take hold and looking for energy field A to subside. Now, this is just my way of describing things, keeping it simple, if you will. So when I say we're looking for a turn, I'm looking for a turn. Could happen tomorrow, might happen next Tuesday or Wednesday. But we're in the zone where we're looking for a turn. We're looking for the market to have a bottoming process. Can she have one more swift decline, capitulation, big down day or two, intraday reversal, turnaround Tuesday, all that stuff? Yeah, that's certainly possible. I would keep that in the forefront of your mind. What are some numbers below current price that we're looking at? Well, I would write these down. I would put them on a sticky note. These are, for example, unless the market's opening below them on Friday, these should be tradable numbers. Here's a little zone I've identified. Now, again, if the market's opening tomorrow on Friday below these numbers are kind of off the table for a bounce situation. There may be resistance on the way back up, but let's narrow it down, just switch over to an intraday chart. And you can see here where the market pretty much finished on our trend line. That's interesting information, if you will. Here's a trend line coming from 2007, and you could see Mrs. Market knows, absolutely knows about that trend line. 548.80 down to 546.40 is an area of interest for Friday. Inside the number members, live room members will have these numbers and more at their disposal. Disposal is a technical term. Write these down, put them on a sticky. Tomorrow is the end of the week. What are we looking at from an end of the week perspective? Can we get a rally back to the 50-week moving average? Anything's possible. We're not going to anticipate it. We have no idea whether she will or will not do that. But what we're keenly interested in, how she treats by the end of the week, this trend line. Do we have another swoosh down? Do we have another lot of points lower than we are now? It's certainly possible. We're going to play it one day at a time. We also have a big time weekly chart breakup candle low down here. That's below current price. There's a lot of things that inside the number members and live room members will have, as they say in the trading parlance, on the board. Let's put something else in perspective. I know the pundits out there, the talking heads on TV, the whole media complex, They've got you thinking recession. They've got you thinking bear market. We're in a correction because the market's down 10%, all that stuff. You got to put that out of your mind and you got to look at the market objectively. So let's just go back in time. This is a weekly chart. Market goes up, pulls back, goes up, pulls back, goes up, pulls back. Pretty good pullback. That was the pandemic low. Market goes up, pulls back, goes up, pulls back, goes up, pulls back, goes up, pulls back. You get the theme. She goes up and pulls back constantly. So what are they doing now? She went up, she pulled back. She went up again, she's pulling back. Does that mean that we'll never go up again? No. You've seen this over and over and over again, but in the heat of the moment, it never feels like the market's going to go up again. By the way, in the heat of the moment, when the market was at highs over here, what were the pundits and the analysts doing? They were raising their price targets, right? Yes, they were. Now what are they doing? And I talked about this the other night. Now they're all lowering their price targets after the market came down for several weeks in a row. Wouldn't it be convenient if the geniuses at Goldman Sachs or Morgan Stanley or UBS or HSBC or any other bank under the sun, wouldn't it be convenient if they lowered their price targets when the market was at a high, saying, hey, this may be a good opportunity to take profit because we're due for a correction? My question is, how come they never know there's a correction coming? But yet when they're in the middle of a correction, they want to lower the price targets following suit with what the media is saying. They're all one thing. You know what they are? They're just a big bag of duty. And as such, they don't know shit or shinola. And yes, duty is a technical term. Was any money made in the live room today or inside the numbers? Here's what I would like to say. Help a brother out. If you made money today in the live room, post a comment under the video. Let traders know this is a place of value. This is a place where I handhold you through making money. Let's cut to the chase. We had one spectacular, bona fide, rip-roaring rocket ride trade this morning, and it was from where? 555.60. How many points did we eat up from 555.60 this morning? How about 35 S&P handles? Do you think anybody made any money with that information? You bet your freaking bottom dollar. How about another number of note? 551.50, give or take. That's the next thing down from 555.60. So let's go to the chart and take a look at what happened. Let's start with the lower number. The trend line was around 551.50, give or take. She spiked the trend line and ripped it back up in the other direction. That was item number 2. Item number 1 is up here at 555.60. This was the trade. If you just follow along and have patience and wait for the market to come into your price, our price, this is what we were discussing all morning. 555.60. If she hits it, we're going to buy it. We're going to play for a bounce back, snap back in the other direction. She spiked it by a little bit, found stability. And what we were saying, what I was saying, as she was spiking through a little bit is we have intraday waning velocity. Have some patience, talking traders off the ledge because they went below by a few pennies. And what happened? Turned around, ripped it back up in the other direction, and the cash register was rung time and time and time again. Traders made thousands and thousands of dollars. You should have heard the comments. 555.60 was the place. Pause the video, read the notes, go back to the chart and double check the work. Same routine, a half hour before the opening bell. 9:40, we're saying they're either going to hit the pivot, which was 559.40, or 555.60. All we had to do was wait for one or the other. 551 or 951, no change. 555.60, give or take, is a bounce back type of place. What information other than that could you possibly be looking for from an intraday trading and making money perspective? How you doing? Pause the video, read the notes, go back to the chart, and double check the work. I just wanted to highlight a few important things. If you're interested in being an intraday trader or already are an intraday trader without this kind of information, I urge you to read the notes, heed the information, go back to the charts, and double check the work. It's freaking remarkable. Check the numbers on all the other markets we cover each and every day. Put them on your chart. See how price reacted around these numbers. What's going on over in Camp IWM? Came right into that trend line today, bounced off that trend line. Do you remember what that trend line represents? Well, let's check it out. You go over to the weekly chart, and it's a weekly chart breakup candle low. Fair enough. They're usually good for what's called a bull-bear battle, at minimum from an intraday perspective. Here's a 5-minute chart. She comes into it, spikes it by a few pennies, rips it back up in the other direction. Does that constitute a trade? Gave that trade to you days ago. How do you like me now? Daily chart perspective, one more time. Made a new low today, still trending down. We're looking for a low. Again, it's time is more important than price. Beginning tomorrow, we're coming into the time frame. Doesn't mean the market turns tomorrow up. She could have one more swoosh down if she wants. And yes, swoosh is also a technical term. What's going on with the folks down at the transportation department? We put this number up on the board, 14,392, closing print today, 14,397.69, close enough. Guess what? That was a target. She's achieved the target. Doesn't have to stop on a dime there. And I'll have you know she's exceeded market symmetry on the downside. Doesn't mean she will or won't snap back. I'm just bringing it to the forefront. Exceeded market symmetry. What about the Q people? Most of the markets look similar to same today. Trending, trading lower. However, you'll note that volume is dissipating. Again, doesn't mean tomorrow it won't pick up, but it has been dissipating over the last couple of days. We're looking for a low. This is where we begin looking for a low. Give us 2-3 trading days or so, we're looking for a low. I'll give you a number you might want to put on a sticky note as a just-in-caser. If you find the Qs down at 450.45, that would be an intraday. Buy them up. You're going to have a bull-bear battle at that number. No doubt in my mind. Of course, there's other intraday numbers that Inside the Number members and Live Room members will have at their disposal tomorrow on Friday, but this is just a just-in-caser type of number. A what if. Capital I, capital F. Financials, XLF, kind of going sideways, going through a chop shop formation, building a bearish, flaggish kind of situation, hovering over the 200 period moving average. Even though this number is just above the 200 period moving average, this is a magic number, 4660. If you find this number tomorrow, once again, bull-bear battle type of place. I would write that down, put it on a sticky. I'm giving you a lot of stuff tonight. How about smash mouth? How about not a new low? How about not even close to a new low? How about, is this a proxy or is this a tell? Do we have a divergence that's telling us there's something brewing, there's something turning, ing, in italics in the market? The SMH is a pretty good proxy for the tech space. And the tech space, well, without the tech space, you have nothing going without the rest of the market. So you need tech to carry the market, and you need semis to carry the tech. Is this step one? How come they're not making a new low? I find that interesting information. I would heed that. I would write this down. I would watch the semis and see where we go from here. Because if this is turning first, this could be canary-ish. Canary-ish is a technical term, as you know. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.